Okay, so with the breakers, all right, with the breakers, we're saying that we are saying that for the bearish breaker, it's a bearish candle in the most recent swing low prior to an old high being violated. All right, so the bearish candle in the most recent swing low prior to an old high being violated. So this is the old high that was violated around this area, the false breakouts at that section. So this is the most recent swing low prior to this old swing high that was violated over here. So the bearish candle in that order, in that section, or in that swing high around this area. Okay, so that's a bullish order block. So we expected that when price got to this side, what it would be respected, and then we would expect a buy over here around this section, anywhere from this side to this side, right? From the range of this anywhere in the range of this bullish order block, but price got traded through it. So we expect that anytime price comes back into this order block, all right, it would serve as a bearish order block. You get it? It will serve as a bearish order block. So prior to this move up, it was this bullish order block was violated, and so we expect that when price comes back to this side, we would sell, or there will be a sell. So price traded into that bullish order block over here, and then there was a sold off, or sorry, there was a sell off around that area. Price was sold off around that area. Okay, so that's the bearish breaker. Another example, let's see if you can find another example. All that you have to look for is a failed order block. All right, a failed order block. That's for the bullish order block. That has failed. So there was one here. All right, so here, this order block, we expected that when price got to this section, right, when price got to this section, there will be a buy around this area. From this range to that range, there will be a buy. Okay, so but price got traded through it. There was a sell off through this bullish order block over here. So we expect that anytime price comes back to this bullish order block, there will be a sell. There will be a sell. So that's what we are having over here. So we look for other order blocks that have failed. Okay, so we have another one here. This order block, this bearish candle prior to this move up over here. I think there are some times that this old high would have to be violated. Okay, that's what we expect. We expect that this old high will be violated. So price should, in the actual sense, have traded to this section. But anytime an order block fails, now you should expect a similar situation to happen. Like this side, this order block, from this side to this side, all right, we expect that when price traded to this side, there will be a similar buy. Okay, but it got traded down, or price traded through it, violating this order block, this bearish candle prior to this move up. So we expect that in the near future, when price comes back to that order block, there will be a sell. So we are seeing that's over here around this section. Okay, so anywhere from this, the low, to this high, anywhere within that range, when price got to that side, we expect that price would drop, and so that's what we are seeing over here. All right. Okay, we have a similar one to over here. From this side to this side, you have this order block. So we expect that when price got to this side, all right, at least we should have seen a little bit of buying, some bullish candles around this area, but all these are bearish candles. All right, so in the near future, when we see price coming back to this bullish order block, we see that we expect that price should sell off, right, because of this order block that has been violated over here. So when you want to trade with the breaker, all that you need is to identify bullish or bearish order blocks that have failed. Okay, bearish or bullish order blocks that have failed. When a bearish order block fails, it gives you a bullish breaker. All right, so let's assume this, let's assume this bearish order block, right, this bullish candle prior to this move down got violated here. When price got to this side, price just traded through it and price just went up. So we would expect that anytime price comes back to this area, all right, the range from this side to this side, anytime price comes back to that side, we would expect a buy around that area. Okay, so that's for the bullish breaker. But because it got respected, you don't want to expect, you don't want to see what do you call it, price going up in that direction. So let's assume you traded this as a bearish order block, right? You traded this as a bearish order block and then price traded through it. Now you could have mitigate your losses or some of your losses when price comes back to this same order block. You could have what at this side you sold and price traded through it, so you could have just go the other way around, just buy at that same section, and then you get some of your lost money back. So you just look for failed order blocks, usually from swing highs and then swing lows. That's where you can find your order blocks. Around those sections are where you can find your order blocks. So around this area, this area, this area, this area, this area, this area, and this area, those are the places you can actually find our order blocks. So if anytime another block gets violated, that's one way you can mitigate, so you can get some of your lost money back if you traded that order block. So this order block over here, right, this bullish order block, this bullish candle, sorry, this bearish candle prior to this move up is a bullish order block. So we expected that when price came to this side, there should be, or there should have been a little sell, a little of buying around this area, right? But price just traded through it, went down. So we expected that in the near future, when price comes back to this same area, all right, this area, we expect some kind of sell. So price came back to this area and there was a sell. Bullish order block. All right, so this candle over here prior to this movement up is a bullish order block. Price trades into it right here and then it moves up again. So this one is, or this one can be our bullish order block. You have this move up from this side, this candles over here, this up, you can see this side, or this three candles added up can be our bullish order block. So from anywhere from this side to this side, when price trade back into that section, we expect that price would rally up. So we see it's here and then here. At this side it traded much higher as compared to this side. Okay, that's the bullish order block. Okay, so let's continue. Okay, so here you can have bearish order block from this side downward. All right, from this side downward, this bullish candle prior to this down move. Anytime price trade into it, we expect that there will be what, a drop. It got here, price got to this side and it came down a little bit, and then it got retested around this area and then this side, and there was a great fall as compared to this side. All right, and same thing around this area too. Price got traded into it around this area, then there was a fall. So that's the bearish order block, an example of the bearish order block as we talked about. Now this one here over here, as we talked about the proportion block, as we talked about in the breakers, right? They are failed order blocks, so it can be either a bullish order block or a bearish order block. But the idea is that when an order block fails, what happens? Now around this is a bullish order block. All right, so we expect that anytime price goes to this section, all right, we should have what, a buy up here around this area. But here price traded to this side and then there was a sell off. Okay, so we expect that in the near future, when price trade to that section, from this side to this side, anywhere around that section, there should be a sell off. All right, so that's what we are seeing over here. Price got traded into it, that it got broken over here, or it got violated over here, and then price traded into it again around this section. Okay, and then there was a sell off. So that's for the breaker. That's for the breaker. That's the bearish breaker. That's a failed order block. A failed bullish order block will give you a bearish breaker, and then the failed bearish order block will give you a bullish breaker. So we have this candle here prior to this move up. Anytime price trade into it, you can use this, and that's because of the wick. All right, so you add them, then price go traded into it, then it rallies around this area too. This side, this is very small compared to this and that's. All right, so I would use combination of all these 1 2 3 to give me a range from this section to this section. All right, so anywhere around this area, when price gets to it in the near future, I should expect a buy around that area. So price got traded into it around this area. Okay, then there was a buy. So another example of the breaker is the bearish breaker is around this area. Here is an order block, a bullish order block. All right, from this side to this side, we expect that when price got to this side in the near future, there will be a buy. But it got to this side or this same bullish order block, and there was a violation. All right, it got traded through it, violating this order block, and so we expect that when price comes back from the other direction up, there will be a sell off. Okay, there will be a sell off, and that's what we are seeing at this side. So that's the bearish breaker from the bullish order block. This one too is our bearish order block. So from this side down here, we expect that anytime price gets to that side, there will be a sell off. Price got traded into it around here, it sold off, came retested it then sold off, it came back again, it sold off, and then another one over here before finally coming down there. All right, now we go to the proportion block. Let's concentrate on breakers and then the order block. Now we have a bearish order block over here. This bullish candle prior to this down movement, price got traded into it, and then there was what, a sell off. Another one here, a sell. Another one here, a sell before finally breaking it. All right. Alright, so a bullish order block, you can go on and on and on. with the order blocks. So let's add the proportion block. Proportion block is a bullish order block. Sorry, a proportion block is the bearish candle which has traded into a bullish order block. Alright, so we should have a bullish order block first before a bearish candle trades into it to validate it or to make it. Then you can call that bearish candle which has traded into that order block or a proportion block. Okay, so let's get some examples from that side. So from this side, this candle small here and then this here, alright, added together. Anytime you see a bearish candle traded into it, which you have over here, this candle traded into it right here. Alright, so this can be our proportion block telling us that price is about to shoot up. Then you have that rally up there. You have another one over here. Alright, a bullish order block. Price got traded into it with a bearish candle, this long one over here, got traded into it, and then there was a rally up above this old high over here, this old high. Okay, okay, you can get another one to here, around bearish order block over here. Prior to this move up, price, a bearish candle, price straight into it around this area, and then there was a rally, a great one. This bearish order block prior to this move up, this bearish order block prior to this move up, price trades into it right here. Alright, then this bearish order block prior to this move up, even though this one is too small, but still it's being respected. Price trades through after this bearish candle has been formed. And then you have a bearish candle traded into it, which confirms our proportion block. This bullish candle prior to this small move up over here. Alright, price trade into it, and then there was a great buy. So that's for the proportion block. Now we have our our bullish order block over here. Alright, now price trade into it, then we expect a sell, but price then creates a false breakout from this side. So you should be aware of these false breakouts as well. Alright, we should be on guard against them. Even though this one is a bearish candle which has traded into an order block, price still managed to create a false breakout and then finally rallying up there. Alright, it just rallied into this bearish order block, and then there was a great sell from that section. Okay, so you can go on and on and on, and you see a lot of them in our charts. Alright, so that's for the breakers, proportion blocks, and order blocks. Thank you for watching.